Okay, so I want to talk to you about a setup on gold on the daily and or the weekly time frame. We do have a very interesting setup, and I do want to show you a bit of context first, if I may. So at the moment, we've seen gold retrace rather aggressively, or in fact give back all the gains made this year so far. You can see that gold since mid-December last year, where we initially went long on gold all the way up here, that low's been breached. But what is interesting is the level where it's currently rejecting. Okay, so as you can see, ever since 2015 here, sorry, my apologies, we can see that if we take this swing low to the swing high of July 2016, we can see that it rejected the 786 level. And if we take this swing low, this notable swing low, from December 2016 to the high up here, we can see that gold is currently rejecting the 0.618 Fibonacci retracement level. Now you can see that previously it likes this level. In fact, July last year, just over a year ago, we came down to this level before firing long again. We are in a very interesting territory because not only do we have a bullish signal here, just above a round number, what I want to bring to your attention is the length of time this retracement took as well. Okay, so what if we take a look at 2015 and the swing high it made in July 2016, sorry, you can see that it took 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24 bars, 24 bars before it went long. Now what is interesting is the comparison between now and when it last made this high. So if we look at December last year and the high it made here, we've had, in terms of retracement, since making that high, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. So you can see that we've got 24 bar retracements on the weekly time frame from the last swing high made in 2016 to this high low in December 2016. That took 24 bars. But if we look at the high recently made the end of January this year and where we are now, that is 24 bars again. Interesting symmetry there, isn't it? Not only are we rejecting the 0.618 Fibonacci retracement, if we look at the daily time frame, we've got something else as well. We can see that, okay, Thursday low tested, and we had Friday taking out the high of that low test bar. But what is interesting is the fact we've got bullish reversal divergence on the daily time frame, on the RSI setting 6. As you can see here, we've got a higher low of RSI setting 6, and we look at price action, we've got a lower low. Now, I'm a much bigger fan of shorter term RSI divergences, quite frankly. And we've also got it on the stochastic setting 833. So that is a sign that the bulls are creeping into the market. So we've got good evidence on our side here. What is more on the daily, and you can see this certainly more acutely on the daily, is the fact we've got this ABCD pattern here. A, B, C, D. If we get symmetry, we do a duplicate of this A to B equaling C to D, we can see that we have completed the D point just where this bullish pin bar reversal closes, okay, in this area here, which overlaps, well, doesn't quite overlap, the 0.618. So we can see that we've got a lot on our side already for a long. The only thing that works against us is the fact that it's taken out this previous low here. But quite frankly, when we're weighing up the pros and cons, every trade's going to have pros and cons. There is a lot more in favour of this to the upside than to the downside at the moment. Okay, so in terms of playing this one, what is more as well, one thing I did want to quickly draw to your attention is taking a look at seasonality as well. We can see here that gold over the historical average over the past 20 years, we've got August, September, October, November, really quite bullish, looking at the general kind of net sum of it. And this is the average over the past 20 years. It's by no means scientific, by the way. I'd rather have 50 in order for it to be a scientific test or sample, but this is a good additional indicator based on fundamentals. Okay, so all that considered, if you did like the look of this one long, then what you can do is place an order to buy on the daily time frame above Thursday's high, stop loss below Thursday's low. That's an aggressive entry. If you wanted a higher risk entry but with higher reward, the daily certainly looks like a good way to go, in my opinion. Okay, but everyone's different. If you wanted a far safer entry, then you might want to look at the weekly. But just having a cursory look at this, if we place our entry above Thursday's high, stop loss below Thursday's low, and we looked at this and we're targeting, say, the previous high here, we can just do a rough estimate. You can see it fits in 1, 2, 3, 4, 5, 6, 7, 8. Risking 2%, that would be potentially 16% gain if it did go all the way. Now, there's not that much chance of doing that. The bigger the profit target, the lower the probability of it hitting target. Obviously, we want it to do as well as it possibly can, but there's a difference between what we might want and what the market actually gets us. So I would say if you did take it on the daily and you did get triggered into the trade, I would scale out at a 1-to-1 and just let the thing run. If you wanted a safer entry and only really wanted to enter, to be sure, is placing an entry above last week's high, stop loss below last week's low, and that will give you a reward to risk of roughly 1, 2, 3, 4. So roughly about half of what you get if you're entering the daily time frame. All right, so that's worth bearing in mind. Of course, you've got safety in your favor if you did trade on the weekly time frame, but this is a classic example of, okay, I want a lower risk trade, but unfortunately the forfeit is reward. So if you go for safety, you're going to get rewarded less for it. Okay, the decision ultimately is yours, and it really does depend on your level of risk aversion. Okay, so if you like the look of the setup, by all means take it. It's entirely up to you and how you decide to trade it, whether it's aggressively on the daily with that limit order based on Thursday's high, or indeed slightly more conservatively on the break of last week's high. It's entirely up to you. What you could do, what is interesting as well, is if we look at the daily time frame on our entry point on Thursday's high, if we look at the midpoint of last week, that is basically in exactly the same place. So if you wanted just an easy entry based on the 50 fib advanced entry which we have, please look in the strategy section in order to get more of a lowdown about it. Just place your entry at the midpoint of this bullish pin bar reversal, stop loss below the low. Okay, so that is gold on the weekly and the daily time frame, and that is a very interesting time for precious metals.